Welcome to the Oxen Group Nightly. My name is David Ristow. I'm the CEO, President, and founder of the Oxen Group. The Oxen Group is a financial analysis and investment ideas firm located at www.theoxengroup.com. In tonight's Oxen Group Nightly, we'll be taking a look at Wednesday's market wrap-up. We'll also be looking at our position in American Eagle, our position in Ruby Tuesdays, as well as other current positions and exits that we have. We'll be also talking a little bit more about our Q2 earnings preview that we have coming out, our forecast for tomorrow, and as always, please check out our disclaimer. Well, the market moved higher today and stayed in the green for most of the day on a tech rally. And over the last 3 days, the market's been pretty flat. We've seen different sectors have good days and different sectors sell off, and everything's pretty much in most sectors kind of moved pretty much flat throughout the week. It's made it kind of tough to pick stocks this week. But today we had good news out from Cisco that they were planning some bold steps to refocus their company, and that helped pump up technology companies throughout the day. And then we also had oil rise today and actually broke 109 at one point, despite gains in inventories. And some analysts said that the gains were a little bit lower than they had expected. But I want to show you something here. This is the U.S. crude oil stocks over the last since June of 2009. And you see here, this is since the beginning of this year in this area. And you see that we've had crude oil stocks rising and rising and rising, above average rise. They usually rise during this period of time, but they are above the average what we usually have. Now, obviously, we always say we have more people, and so we're going to have more demand always for more crude oil. But the reason that most crude traders have told you that oil prices are rising is because maybe there'll be a supply issue from Libya and some of the other problems, and that really was the initial catalyst. So how come there hasn't been a correction, since obviously there's been no disruption in the supply and oil stocks continue to rise at the rate that would be expected of them? Oil prices rise before the summer and then they drop right around at the beginning of the summer. That's typical for crude. But the problem is that we had this rise right here. When crude rose up in the beginning of the year and through February, when no one was expecting it to rise as drastically as it did. And I think that there's a definitely a discrepancy between how much oil prices have risen and how crude stocks have also risen with them. We have a lot of crude oil there, more than we, each week we have more than we need. It rises more than it drops. And there's really there hasn't been any problem with the supply of crude. And so if there's no problem with the supply of crude, then the initial reason why we went from 90 to 100 was because we were going to have supply issues. Then how come we haven't seen any correction? I think it's another issue with that oil market. It's just that they tend to trade very, very short-sighted, and they lose track of that sort of some of those initial reasons why. It's going to continue to rise. Stocks are going to continue to rise, and I think it's going to be very interesting to see what happens here around the June area. Do we see stocks continue to rise here and break the average trend, or will they drop? It will be interesting to see what happens there. But the market did have its best day of the week according to the Dow. The market opened well and then fell off on more low volume, and some of those the crude prices continued to rise, kind of weighing on equities. But then the market did rally into the close, and I think it was kind of a bullish sign to see. We gained on those dips, but overall, I'm just not really satisfied with this market this week. A lot of positions just kind of seesawing around, nothing really kind of gaining any weight, and I think everyone's just pretty much waiting for something to happen. It's the lack of economic data, no major earnings, and overall it's just kind of a blah. One of the positions that we took today, we've been talking about this market kind of seesawing back and forth and not really having much of a direction. And one area that seems to have been, kind of bucking that trend and rallying pretty well this week was retail. And one of the areas that really has been doing well is teen retail. Department stores and some of the other retail stores might be seeing a pullback because of gas prices, or parents having to spend more money, and adults, having to spend more money on gasoline. But teens they don't care about gasoline prices. They're going to spend their money on the clothing they want, no matter what's going on. And that's always been true. And American Eagle is one of those companies that has kind of lagged some of its competitors like Aeropostale, Abercrombie& Fitch, Buckle, Zumiez. And today we had upgrades on Aeropostale, Abercrombie& Fitch. Yesterday, Abercrombie& Fitch raised their targets for sales for the year. And this company, we thought might take off today. We kind of bought it on a bit of a rally, and we sort of just caught it kind of towards the end of that rally, and the stock kind of trailed down and then sort of flatlined the rest of the day. Came close back to our entry a few times, but I didn't want to take a whole position into the close because tomorrow we have retail sales coming out, and we actually got some numbers, and after hours they look pretty good from Zooms. Hot Topic was weak, but I'm expecting that with the numbers we got from Zooms, and I'm thinking we haven't seen a lot of the numbers come out. Some of them are coming out tomorrow as well. I think retail's actually going to surprise. There were really low expectations for March simply because of bad weather, the high gas prices, and I think it was a little over the top on how much analysts brought down their expectations. And I think that's going to be very easy for these companies to beat. However, it's you never know, and we don't want to anticipate the market too much. We would rather be a little bit more reactive, and I thought we would be able to get some of that sort of sentiment that these estimates might be a little too low today moving into American Eagle, but it did not happen. So we had to take the 70. We took 75% off of the position at a 0.5% loss, not much, nothing really too drastic with retail sales looming. But as you see, one of the reasons we like this one was because the stock broke out of this downward channel we had right here. You see that this channel was, here at around 16, and the stock broke out of it yesterday, and we thought that trend would continue. It did continue somewhat, but not as well as we had hoped. Very low volume again on the stock today as well, which kind of not really, it sold off, but it was on low volume, so that sell-off might be a little bit weaker than on weak volume. And also we had a position in Ruby Tuesdays, and a very disappointing position. We sold off 75% of this position for about 2.5% gain. We took a 25% position into earnings. We were expecting pretty good things from this company after they had 4 straight really good reports. Really done a good job of turning their company around, and it looks like they took a quarter. They took a step back this quarter. We saw the earnings come out. They missed on revenue and estimates, kind of cut some targets, pulled some stuff back, and wasn't really nearly as good as had been expected. And the kind of stock dropped significantly, maybe down. We're not sure where it'll open tomorrow. I think it's going to open right here around this trend line right here, around 12.10, 12.15 for around an 8 to 9% loss at the open. Hopefully we'll rally off that. And we only have a 25% position left, so even an 8% loss on that last 25 we'll still get a small gain on the stock. It was disappointing though to see one of our positions that we've at least had that's actually done something this week sort of lose some of those gains, and that was kind of our fault on that one as we took that 25% into the earnings. Should have probably just locked away those gains. And we also have some other current positions. We were able to enter and exit on short sale on drag ships for a 1% gain today. We exited our position in PIR for a 0.67% gain. We're still holding Apple. As you see, these gains are very small. Nothing, and just that's the way the market is right now. We can't get a lot of movement out of anything. Things that should be moving are just chugging along, very sluggish. Things that should be going down are kind of still sluggish as well. So it's kind of just, nothing is really making too much headwind. I mean, today, let's see, we got the 1.6% gains here, and we exited this, RT position for a 3% gain today, and then AEO we took for 0.75% loss. So overall, you're looking at, pretty much a pretty good day for us overall, about 2% in the gain, but it just doesn't feel like it was a really great day in the market, and I think that has just something to do with this. There's not a lot of volume. It's just a boring day, really. So we're hoping we can get something going tomorrow. Quarter 2 earnings preview. This should be out tomorrow. We're hoping. This is going to be a very interesting report. I think a lot of you are going to enjoy this. It's going to be a very in-depth look at some of the best value plays in quarter two. We're going to give you a top play in literally every sector out there. We're going to give you the top 5 overall best picks that we have for the quarter two earnings. This isn't what companies are going to do the best with their earnings. This is more like what companies have the most ability to make gains moving into earnings. Which ones will be the weakest moving into earnings, which ones will be the best large cap, which ones will be the best mid caps, which one will be the best small caps, all that stuff. It's going to be a very cool report, and it's for all of our premium and basic members and our trial members. So if you're not a trial member, you're not a premium member, you're not a basic member, you'd like to get into this preview, this is going to be a nice in-depth report. A lot of research has gone into this, and if you're looking to get into see what's going to be going on with quarter two earnings, this is a great way to get involved with the Oxen Group Equity Analytics. For tomorrow's forecasts, I think it really comes down to tomorrow that those earnings, I'm sorry, that economic data coming out from the retail numbers, initial jobless claims, those will have a huge impact on tomorrow's market. If those retail numbers are better than expected, then I think basically all the fears that anyone had about that the consumer is being threatened by gasoline prices will be completely washed away. We could see a big rally off of that, and some of those numbers do look pretty good coming out in the after hours. I mean, we've had a very small scope, but I'd like to see how the general public is doing. We saw mostly just teen stuff, so that doesn't have as much of an impact as maybe like department stores. We did have a nice rally into the close, which was bullish, and I think again, people are starting to, no one wants to sell off anything because earnings are coming, but at the same time, no one really wants to buy anything because we're going into earnings. And this season has a little bit more fear with some of the general world crisis things that happen, and that's going to be part of this earnings preview that we have. There's going to be a lot of plays out there that are kind of undervalued, that have sort of moved down with the general market, that are really strong plays that have very little exposure to any Middle Eastern problems, any Japanese problems, anything like that. One of our favorite sectors, I'll give you a little bit of a preview. We have looked at some numbers, and regional banks look very strong coming into quarter two earnings. They haven't moved up a lot, and we will have a lot of those companies that we like from that sector for you in that report. Yeah, but I do think we should have a good day tomorrow as long as the jobless claims and the retail numbers are strong. We did have the weak earnings from Ruby Tuesdays, but at the same time we had very good numbers from Bed Bath and Beyond. And after hours, Pier 1 Imports is tomorrow morning. A lot of consumer related companies. WD-40. So we'll see how those all pan out for us, and that's going to do it for today. Not a very exciting day in the market, so maybe the Oxen Group nightly is a little less exciting. But please visit us at www.theoxengroup.com. Email us at contact@theoxengroup.com. Call us at 1-800-709-1160. Please become a part of our 70% plus accuracy.